Now, I'm often asked here on the air about reverse mortgages, and 100% of the time, I've told people to not do reverse mortgages. Good article in the Washington Post over the weekend, and I tweeted out the link over the weekend. A guy tweeted it to me, actually, is where I found it, and I sent it back out. And listen to this. As she was getting on in years, her resources dwindled. Virginia Rayford took out a special kind of mortgage in 2008 that she hoped would help her stay in her three-bedroom Washington row house for the rest of her life. Rayford, 92, took advantage of a federally insured loan called a reverse mortgage that allows cash-strapped seniors to borrow against the equity in their house that is built up over decades. But the risks of the financial arrangement are stark, and today the frail widow finds herself facing foreclosure. Under the terms of the loan, Rayford can defer paying back her mortgage debt that totals about $416,000 until she dies, sells, or moves out. She is, however, responsible for keeping up with the other charges, namely the taxes and insurance on the property. The loan servicer, Nation Star Mortgage, says Rayford owes $6,004 in unpaid taxes and insurance, and if she cannot come up with it, she stands to lose her home in Washington's Petworth neighborhood. I've cried a million nights wondering about what I'm going to do, Rayford, again, she's 92 years old, said. Across the nation, an increasing number of seniors are facing foreclosure after taking out reverse mortgages, either because they fell behind on property charges or failed to meet other requirements of the complex mortgage loans, according to the federal data and interviews with consumer and housing specialists. The Federal Department of Housing and Urban Development, HUD, which insures most reverse mortgages in the country, says it lacks detailed data on how many homeowners have lost their homes or facing foreclosure in the program. Which, by the way, is a lie. They don't lack details on it. Which was launched in 1989 and covers about 636,000 loans. And Nation Star, the lender on this case, declined for comment. No kidding. But a HUD report issued, HUD, who doesn't have detailed data, issued a report that found that nearly 90,000 reverse mortgages held by seniors were at least 12 months behind in payment and taxes and insurance and were expected to end in, quote, involuntary termination. I don't think I want to be involuntarily terminated on anything. That's federal bureaucrat speak for we're going to shoot you in the face. Involuntary termination. Oh, my God, that's a scary phrase. In 2017. That's more than double the year before. Well, let me help you with this, folks. Okay, let me walk you through some numbers. There's 636,000 of these loans out there. 90,000 of them are in default, headed to foreclosure. That's 14% of the loans are failing. That's astro-freaking-nomical. Unbelievable 14% failure rate. Still, he said, reverse mortgages are a critical resource for seniors who wish to access their accumulated home equity and age in place. Thank you for the HUD spokesman for figuring this out. They have a completely failed loan program that is causing senior adults to lose their homes at an unbelievable record. But his answer is, it's a critical resource for seniors who wish to access their accumulated home equity and age in place. You sound like a lobbyist, dude. You don't sound like somebody that can add. Before 2015, the only thing homeowners ages 62 and older needed to qualify for a reverse mortgage was equity in their home. Lenders weren't required to determine whether they could afford to maintain their homes or cover the taxes and insurance payments in the future. Since homeowners used the funds to pay off the original mortgages or ran out of money after covering living expenses over many years, now HUD requires all borrowers to undergo a financial assessment. Wow! Before we give a mortgage, we actually do a financial assessment. You guys are rocket scientists. Unbelievable. Listen to this. Tens of thousands of troubled loans remain. More than 18% of reverse mortgage loans. Remember where earlier figure was 14 currently? More than 18% of reverse mortgage loans taken out from 2009 to 2016 are expected to go into default because of, that's 1 in 5, because of unpaid taxes and insurance, according to a HUD report. That compares with less than 3% of federally insured loans in the traditional mortgage market. So your typical FHA loan, about 3% of them go bad. 18% of these reverse mortgages are going bad. I told you these things sucked. Representatives of the National Reverse Mortgage Lenders Association declined for comment. Well, I would too. I'd run for the hills and hide behind the biggest bush I could find. Advocates of the loan, including celebrity spokesmen such as Tom Selleck and Henry Winkler, say reverse mortgages can help seniors enjoy their later years. No, they don't really say that. They read a script. Borrowers can receive, listen, here's the terms of reverse mortgage, in case you didn't know. Borrowers can receive 50% to 66% of the value of their equity, depending on their age and interest rate, and the interest rate generally set about 5%. Now, why do I tell you not to get reverse mortgages? Because you're going to lose your home potentially, because you get into all kinds of problems, and because the interest rates and the fees are a really bad ripoff. You ever heard me say that before? Okay, so let's hear what they just said. Interest rates are generally set about 5%. Do you know what the going rate on a 15-year fixed is today? A traditional mortgage, a HUD mortgage. Do you think it's 5%? Anybody out there? You think it's 5%? I get a report every morning. I'll tell you what it was this morning. 3 1/8. So you're paying almost double, you old people that are getting ripped off. Thank you, Tom Selleck and Henry Winkler. We appreciate your endorsement. You get the opportunity to pay double and potentially lose your house when you're 92. This is a dadgum mess, people. Unbelievable. For example, a 73-year-old with a home worth $100,000 and no current mortgage could receive a loan or a lump sum on monthly installments up to a line of credit for up to $57,900, not including closing costs, according to HUD. So you could take your $100,000 house and get $60,000 out of it and potentially lose it. Is anybody listening to this? Unbelievable. The Federal Consumer Finance Protection Bureau has long warned about deceptive advertising and reverse mortgages. In December, the federal agency fined 3 companies, American Advisors Group, Reverse Mortgage Solutions, and Aegean Financial, for alleged false claims, saying they told seniors with reverse mortgages that they would not have to make monthly payments or face foreclosure, omitting the risks of failing to pay property charges. These companies tricked consumers into believing they could not lose their homes with a reverse mortgage, said the Bureau director. The companies did not admit wrongdoing in settlements that required that they pay $790,000 in fees. One of the companies was American Advisors Group, which is where Tom Selleck says he speaks on behalf of them. Many older Americans are in a tough spot right now. Why not use a reverse mortgage to make sure you completely lose your home? Oh, no, that wasn't what he said. I put words in his mouth. Excuse me. Hey, guys, telling you for years, reverse mortgages suck. There's all your details. Interest rates are double. The foreclosure rates are 8-fold. This is ridiculous. Answers the question. Run! This is the Dave Ramsey Show.